saw that massive sell-off in cryptocurrencies on Monday. There's a lot of uncertainty about what comes next. Kevin, you've said that 20% of your investments are in crypto. And so I just want to start with, what are you doing? Are you exiting some of these positions? Are you buying more?
No, I'm actually averaging down on a couple of the big market cap names. I mean, one of the challenges, and this is proof now for why we need legislation and policy on crypto, because if we had institutional capital coming in under the market, if they had allocated 50 basis points or 100 basis points to, let's say, Ethereum or Bitcoin, Solana, Polygon, whatever, you would have had a bid. Instead, because we're basically under-owned by institutions, we have tremendous volatility. And we've seen this before. This is not new. It'll, recover eventually, but this is the nature of crypto unregulated. And so my argument is this really should get us focused on policy. I'm hoping for policy on stable coins and then into other assets as well, NFTs, that kind of thing. We're at the nascent stage, but the volatility is because we don't have the institutional bid.
How should retail investors be thinking about this sell-off? Is it an opportunity to buy at a discount, or is it just too risky to make any sort of bet at the moment?
No, I mean, everybody has challenges with volatility, but I remind everybody, just go back 17 years to a stock called Amazon. It also corrected 38 to 50% every year for 12 years in a row, as people tried to figure out what this new entity was. And so there's always tremendous volatility in new and nascent technologies and new markets. And crypto is a new market. I still predict in 10 or 12 years, it'll be the 12th sector of the S&P. There's just too much productivity opportunity here around payment systems and all kinds of other attributes of these blockchain projects that we just don't yet know what the upside is going to be. And I'd argue this, if you go to any graduating class, particularly now, it's very timely to say this, ask any engineering cohort, you're going to find a third of the engineers go onto the chain. They want to work there. They don't want to work in the other 11 sectors of the economy. They want the opportunity to create something new. And that's why you've got so much intellectual capital going into this space. You know with certainty down the road that the next genius ideas are going to come from this. Any college, any university, any engineer, they all want to work on the chain.
Well, on that last point, let's talk about crypto-focused businesses for a moment. Coinbase this morning announcing that they're cutting 18% of their staff. Gemini had a similar announcement, as did Crypto.com. MicroStrategy is down 75% year to date. Are crypto companies uninvestable at this point?
No, I wouldn't say that. There's two categories of crypto companies, ones that use leverage and ones that don't. Now, when you have a very volatile asset and you have the fortitude, I'm going to use that word, to use leverage to enhance your returns, you also run the downside risk of what happens when there's a major correction, as is occurring right now. You can get caught offside pretty quickly. And so Celsius, that's a good example of that. And I don't want this to sound trite, but let me explain how bottoms are made in any market. I don't care if you're in equities or in debt or in crypto or in real estate. You always need a big player to go to zero. That always helps, whether it's long-term capital or whether it's one of these crypto infrastructure companies. I would like to see, and I don't want this to happen, but it always gives you a good bottom when you get a large player over-levered that goes to zero. And that always tends to be the beginning of the rebuilding process. So if you have to sacrifice someone who used too much leverage, and it's always leverage that does this, somebody's over-levered, positions are complicated, they're not transparent, they're not liquid, and they go to zero. Someone is out there on the brink of zero. That's okay. In fact, I'd argue that's a good thing when we get it. Now, do we get it this week? Do we get it next week? Someone's going to zero. I don't know who, but it'll be great for everybody else that survives because everybody will learn from that. And that's what I like about a washout, an event. And I think we're due for one in crypto land. And I don't know who it's going to be, but I guarantee you 100%, I've seen this movie before, you will learn later that somebody put on a heavily levered position. They got wiped out. And it's good. It's a good thing. I don't use leverage on crypto because I've seen volatility like this in the past. There are certain assets where I might put leverage on, but it won't be in crypto. I mean, when you see volatility of 50% on an 11-month basis, which we're seeing in Bitcoin, 60%, 20% days on Ethereum, you can't afford to put leverage on that. But, people will learn their lessons. This is a good thing in the sense that this generation of crypto investors has not gone through corrections like this and not gone through them with leverage. Now they're going to learn an important lesson. Everybody I know that has survived volatility has had a very important lesson or a date with leverage. And they didn't have a great dance that night, I must tell you. I think right now, if you're, licking your wounds, go to the large cap projects. I mean, the Ethereum, Bitcoin, obviously. Polygon's been slaughtered, and it's a good project. Great opportunity to add to it. I have very big positions in these names, and I've been nibbling as well. There's nothing wrong. The one thing I would tell everybody is you can't pick the bottom. It's impossible. You have no idea when it's going to happen. But if you're staying long the category, you need diversification. I have so many different positions on right now, and they're all over the map. Now, come year end, what'll happen, because this is a year where we're going to be looking at tax returns on all crypto trading and income, there'll be a lot of maneuvering on the projects that did not recover to take them as tax losses versus the ones that did. And that's going to be the nimbleness of trading. And that's why it's important to look at your positions and make sure you have liquidity in them, because most of these projects are very, very liquid, so it's not a problem. And we actually haven't seen, we had the Binance story yesterday. They looked for a couple of hours of room on what they called a lazy trade. The Celsius thing, well, that's a gate. That's not good. So that will not end well. And when you lock the gate in a hedge fund, basically, you upset a lot of investors, and when they get the opportunity to sell, they do with a vengeance. Never good to do this. Can't help them, but they didn't understand the situation, I guess, but there'll be some money lost there. But Binance is the big daddy of them all on platforms, and they seem to be surviving. I mean, these are the things you look for in stress situations. You've got a lot of infrastructure holding its own. So I think there has been some maturation or maturity coming into the crypto market by these behemoth infrastructure projects. I'll say the same for BitBuy and for WonderFi. Holding their own, making sure their clients are being taken care of. I have big positions in those companies as well. So we're all, weathering the storm, and you have to do this. There's nothing else to do except watch with wonder.
Now, you said that it's hard to call a bottom, but let's say we continue to see a sell-off. Is there the possibility that the crypto sector, dropping in value could hurt the U.S. economy ultimately, or is it just a degree of magnitude so irrelevant that it's not going to make much of a difference?
Well, the great news about the crypto economy and even positions like Bitcoin or Ethereum, these are decentralized holdings. It's not just the American investor exposed here. Bitcoin is all around the world. And it's only 880 billion before the correction, which, as you rightly pointed out, is a big nothing burger. And so that's nothing. I mean, even all of crypto under 2 trillion is still nothing in financial services. So there's so much upside to this sector when we do get policy, when we get institutional investors and sovereign wealth involved, then you'll start to see real assets. But, if Bitcoin went down another 20%, it wouldn't really matter because it's spread around everywhere. And most of the holdings are not institutional. For all the excitement about Bitcoin, no institutions own it yet. And that's the decision you have to make at a time like this when you're an investor. I mean, this is an opportunity to say to myself or anybody, look, if I believe in 3 years, 36 months, that there'll be policy on Bitcoin, do I want to own it after policy comes and all the institutions start buying it? Or do I want to take a chance and live with some volatility now and buy it here at 24 or 23 or 20,000, whatever it's going to go to? I don't know. But if you believe in Bitcoin, it's a buying opportunity, but you can't guarantee that you're catching the bottom. Nobody catches the bottom. It never works that way.
There's lots of precedents for this in history. To get a bottoming in an asset class, you need a major player to basically be offside. I'm looking for something bigger. Somebody out there is in trouble. We don't know who they are yet. We'll find out soon. It'll probably happen in the next 30 days. Some giant player is going to zero because this is the first time applying leverage to an asset class that most people assumed wouldn't be this volatile, but has proven to be volatile yet again. And I say all this, and it's important that this happens. It's bad for the individual investors, but in the context of making this market more educated, more institutional, more stable, with better price discovery and less leverage, you need these players to go to zero. So Celsius, thank you for your sacrifice. They'll go to zero, but they're not big enough. They're a small bit player doing something really bad, using leverage to offer 15 to 18% staking, which of course is going to go to zero. But that's okay, because now other investors investors, after watching what Celsius did or what Luna did, will not favor those structures. They will not put new capital to work there. Market's very smart that way. So by creating these events, taking these to zero, even the entire, under $1 trillion crypto market is nothing. We need, it's really small in the context of where it could go. And so what we need to have happen, and the interest is, I was just, before I came on with you, I was just talking to institutional investors in the Middle East. There is so much interest in getting into crypto right now, and they can't do it because they have no policy and they're not compliant because they're sovereign wealth funds. And they don't have the option. They have no infrastructure for compliance to buy Bitcoin. And so they're really interested in, putting 1% to 3% into Bitcoin, which is the granddaddy asset, given that it's had such a price correction. They're very interested. And, what does that mean in terms of demand? Well, if you're running a $900 billion sovereign wealth fund, that's a lot of demand. And so we don't have that in the market yet because we don't have policy. So when anybody says to me, we want to remain unregulated, they don't get the joke. We're going to stay small and tiny and fractional. Under $1 trillion of assets is nothing. It's nothing. It could be multiples of that if we could finally get some policy. We need two things. We need that capitulation event, and I'm sure we're going to get it. And that's a very good thing. And I've given you the reasons why. It'll be chaos in the streets kind of thing. Bitcoin will probably drop down significantly. I don't know, maybe another 20% down. Who knows? It's impossible to know. But again, it's a good thing. It's the beginning of a bottoming process. Then we need one of these bills that's floating around Congress right now. And I would suggest the one that I'm most interested in is the simplest to pass. That's going to be the Haggerty or Toomey bill that contemplates auditing stable coins, which is a really easy thing to do and would make it and if we just could get some policy on one thing and it was stable coins, that would really be good because you would start to know with certainty that you get some movement from the institutional client to allocate. And I'll give you an example. You mentioned WonderFi earlier. Yesterday, WonderFi announced, it's all over the papers up in Canada, that the TSX, the premier exchange there, invited them to list on the TSX. The first time in history a crypto exchange with a dealer broker attached to it has ever been invited onto an institutional exchange. And the reason they did that is there's so much institutional demand in Canada for product. There's a huge amount of demand, and the regulator in the Canadian market is a little bit more advanced than what we have stateside. The UAE is very advanced as well, Switzerland, England. These are other countries, Australia, where you're a little more advanced on policy, and these large institutional equity exchanges are asking to list the shares of these dealer broker crypto exchanges. So I consider that all positive, all positive. But I think right now we haven't found a bottom yet for crypto. Every time there is a washout, it's leverage. And I don't know, and more, it's very opaque right now in some of these situations and these projects, how much leverage is involved. We know now that algorithmic stablecoins will fall out of favor. When you take Luna to basically a zero, people lose a lot of money and they don't want to do that again. And that's a good thing. It's an educational process. That's okay. Great capitulation occurs around events. The long-term capital, the one I keep referencing, was the bottom of the market when that thing blew up. It blew up on leverage, and it was chaotic. I think we'll get a couple of hedge funds. If they're big enough, they'll be considered, catastrophic events. And that's it. The market always goes on. If something blows up in crypto, it doesn't end crypto. The promise of crypto remains, but we really need it to get that bottoming process started. We're not there yet. We're in the slow grind down. Every day down another 2.5%. It's very painful to watch. What you want is that toilet to flush. Okay, if we have to go down 25% more, let's do it. And then it's a huge buying opportunity for those that have this stamina to take that kind of volatility. And then you reflect on it 18 months later saying that was the bottom. It's always around an event. That's all I'm saying. I'm just being a student of history. And it's going to happen. You will be reporting on it. You will be reporting on it. You'll remember this conversation. It's coming to a theater near you.